Hope you had a very lovely weekend. Thank you, everyone, for the support. They're coming in, and I really do appreciate. Like I said, you can always check, the website to get to see the list of donors. Your name can be there. Okay, just reach out to us. Okay, and then let us know how you can be of help to us, and then we'll also get to have an agreement on how to go about it. Or better still, you can just pay into the account displayed, and then let us know. Okay, otherwise it will be, what I mean, other copies for your library. Okay, let's quickly okay, it's been a series of shares, securities, what they call financial assets, right? But basically shares, right? So we've talked about, don't forget, we are still on, payment in full, basically. So we've talked about, shares issued at premium, at par, at discount, at this level. I don't believe you understand what I'm talking about. Otherwise, take your classes on those, aspect of the series. We talked about oversubscription, talked about undersubscription, okay, in our previous classes, right? So today we are looking at accounting for scrip issues, okay? All right, if you don't want to call it scrip, you can call it bonus issues, or let's creatively call it free issues. Okay, so what I'm saying is that the business or the company is actually giving shares to shareholders, or let's say members, okay, without them paying for it. So what I'm saying is this: let's assume you have 1,000 shares, okay, in company A. Okay, so what we're saying is company A ordinarily, okay, should declare dividends, okay, whenever profit is made, okay. So dividend is what shareholders are entitled to. But it's possible that for some reason, okay, usually, with the way the objective or the congruence or the goal congruence of the organization is, and then because of the need for operational funds, the profit made for each period might have to be utilized for operations, and as such, instead of declaring dividends, the profit is usually reserved for such operations. Of course, I told you that the profit made in a particular period, if not appropriated or shared, it's a reserve. Do you understand? Like you made a profit of, say, let's say 20 million or 20 billion, and you're not utilizing it or appropriating it, okay, in terms of dividends to shareholders. The profit will be in the business, okay, and then it will be utilized for other purposes. So that happens. Do you understand? Now, usually, management might decide that in order to compensate or, to, give some comfort, okay, if dividends is not paid, they will decide to what? Give shareholders, they'll give them more shares, okay? But in this case, the shares are being given without payment. So we say shares issued without what? Payment. So it means that the shareholders are not paying for the shares. That's why it is called what? Bonus issues, or bonus shares, or scrip issues, or scripture, or free issues, or free shares. Okay? So here you have 1,000 shares in company A. So, and if you're giving, let's say, additional 3 shares that you're not paying for in form of bonus, it means your share will increase to 1,003. So these 3 shares here is referred to as what? As a scrip issue, or a scrip what? Share, or bonus issue, or bonus share. So usually, where shareholders are giving bonus, okay, what it means is that what? The business, it's not giving out cash in terms of dividends, okay? Instead of giving out cash, they are giving out what? Shares. So shareholders will take more shares, or will get more shares, all right, in the what? In the business. That means their interest in the business in terms of ownership will increase. So usually, from the investor perspective, if you're going to be, talking like a stock analyst here, okay, the shareholder might now decide to go and recoup cash or get cash from the stock exchange. At this level, I expect you to understand what stock exchange is. Otherwise, you might have to take class of Nigerian financial system. It's on Jados Consulting. Okay? Go and take this. You understand the stock exchange. Of course, it's a market or a platform where, okay, existing shares are bought and sold, right? So usually, bonus shares, the owner can decide to what? Take advantage of the stock exchange to get cash by selling the shares. But they are not paying the company for that share. So they can go to what? The stock exchange to trade the what? The bonus to get money. Okay? So, the argument of whether, the price, should be slightly below or above, of course, above, or usually it should be below, all right? Decide, you're not even paying anyway. So it's zero cost from the investment perspective of the shareholders. So whether the price of the share of the stock market is less than nominal value or not, it's not your concern, basically, because you didn't pay for that additional shares. So if you're going to be selling them, you're going to be making some money from the investment perspective. So the cost of that investment is nil. Talking about the bonus. Okay, this is from the shareholder's perspective now, as an investor. Okay, so if he's now going to sell at the stock exchange, he's going to be making what? Profit. But that's not what we're discussing here. We're talking from the perspective of the what? Of the company that is what? Issuing shares to the shareholders. So here, the company is saying that the shareholders should get more interest, should get more ownership in terms of units, but they are not paying for it. Usually, if you're going to be getting shares in a company, you're supposed to pay for it. But now they are giving you some for free. So the guy that has 1,000 shares, getting 3 shares, for instance, is now having 1,003 shares. So from the perspective of the what? The company issuing the shares, the bonus share is more like what? A cost from the what? Company's perspective. Okay? Which usually will reduce the reserve. Do you understand? Usually, if you have declared a dividend, okay, you would have paid the dividend in cash. Right? So that means there will be a reduction in your cash to clear the dividend. But in this case, you're not using cash. Right? You're using your reserve to accommodate the shares that you are giving for what? Free. So typically, your bonus issue, okay, in a simple form, okay, is a way of compensating the what? The shareholders for not declaring what? Dividends. Okay? So if you have not declared dividend for a particular period, okay, or for some other reason, sometimes it is possible that, the company is making profit, but this is tied down in some other what? Assets. Okay, so of course, in order to what, make, improve the confidence of the shareholders in the business, you give them bonus. So in that case, it is expected that what? The bonus share will be accounted for, okay, but this time around it has to be accommodated by the what? By the reserve of the what? Of the business. Okay, so that's the simple form of accounting for bonus what? Issues. Bonus issue is a free issue, it's a script issue, it's an issue given to shareholders without getting money from the shareholders. Okay, and usually there's usually a reserve, okay, to accommodate the what? The bonus issue, since shareholders are not paying for it. So it's like a cost from the perspective of the company, which usually is taken out of the reserve. Of course, reserve is more like profit made but not what? Appropriated. All right, so that's it. If you have questions, you can reach me on the numbers displayed. I'll be able to reply you with the right answers. So let's look at this simple question so you understand what I'm talking about. So let's go. We have the following represent the balance sheet of MySpace PLC. Okay, so we have statement of financial positions at 2010. So we have non-current assets. We have current asset excluding bank. We have bank. Total asset there is 11.8. Finance by liability, we have short-term liabilities 2.5. Reserves is 5.2. And then we have authorized share capital, at £1 each. Then we have ordinary share that's 4 million. So total liability is 11.8 as well. So the management, team has over the years reserved the profit made by the business for operations. After the review meetings of the business of March for 2010, it decided to compensate the shareholders with a scrip issue of 2 for every 5 held by each shareholder. The shareholder revealed that all shareholders qualified for the issues evenly. The scrip issue procedures came to the conclusion on 30 March 2011. Show the necessary entries to record the shares issued. This is a very straight question. So what they're saying here basically is that the business has been in operation for a while, and profit is usually reserved for operations. Okay, now they're saying that they want to compensate the shareholders by issuing what? Giving them bonus. Now they're telling you that the scrip issue which is the bonus issue, or the free issue, is 2 for every 5 held. So that means if you have 5 shares, you get 2 extra, right? So let's go. So we have MySpace PLC, right? What are we doing there? They said what? To decide to compensate the shareholders with scrip issue of 2 for every 5 shares held. So bonus description, right? Okay, is what? 2 for 5. So it means if you have 5 shares, let's say 5 shares gets what? Additional 2 shares. So how many shares have been issued? Authorized share is 8 million. They've issued 4 million shares. So we have 4 million shares, at what? £1 what? Each. Now they are saying that what? These 4 million shares, of course we don't know the number of people that has these 4 million shares, but we know that if you have 5 shares, you get 2 shares, right? So if we assume that one person has 5 shares. So how many people has 5 shares, right? That's a simple way to what? Interpret it. So if one person has what? 5 shares, okay? It will mean, therefore, that what? 4 million divided by what? 5. We give us the number of people that has 5 shares, right? So 4 million divided by 5 here. What do you have? 4 here is 0.00008, right? So that will be 800. Am I right? So we do 4 million divided by what? 5 here. That's 800, right? 5 times 8 is 40. So put 40 here, add the other 0 there. What do you have? That's 4 million, right? So we have 800,000. So you can say what? 800,000 what? Shareholders. Abi has what? 5 shares each, right? So now we are saying that what? Every 5 shares gets 2 what? Additional shares. So it means each of them will get 2 shares additional, right? Isn't that what it means? So what will it mean now? So if you're giving 800,000 shareholders 2 shares each, right? What would that mean? That would be 2 times 800, right? That's 1,600,000 what? Shares, right? To be shared among what? Among 800,000 shareholders. Another way we can do it is to say 2 divided by 5 times what? 4 million. Right? So what do we now have? This will be what? 2 times what? Here 1, here what? 800 what? 1,000. That 2 times what? 800 what? 1,000. So that will be what? 1,600,000 what? 1,000 what? Shares. Right? So that would mean that what? Our shares, or that's ordinary shares, right? Will now be what? 4 million plus what? 1,600,000. So that will be what? 5,600,000 what? Thousand. Right? So the ledgers now. What do you have? Are you there? What do you have? So we have ordinary share what? Capital, credit, debit. So what's the opening balance for your share capital there? 4 million. So we say balance brought forward. What's that? 4 million, right? Now there's a bonus issue of what? 1,600,000 what? Shares. Right? So that would not be what? Let's call it bonus. Right? Let's say bonus issue. What do you have? 1,600,000. So the new ordinary share capital will be 5,600,000. So we now have balance carried down, right? To be what now? 5,600,000. So the new ordinary share now will be 5,600,000. So that means here, what do you have? You have bonus what issue, right? Or bonus share. Of course, this year we say ordinary share capital. How much? 1,600,000. So the new balance will be 1,600,000. Right? So this is more like a cost. You can see the behavior now. Remember the trial balance. Okay? Ledgers with debit balances can either be an asset or an expense. Ledgers with credit balances can either be an income or a liability. So you can see here, it's a credit balance. Here is what? A debit balance, right? So ordinary shares has increased from 4 million to what? 5.6 million. So we've given out what? 2 units of shares each, okay, to every individual having 5 shares. Okay, so let's go. When I say what? Statement of what? Financial position as at 30th what? March 2011. Right? We have the what? Assets. So what are the assets according to the question? Non-current. What's the non-current asset there? 5025689. 5025689. Current asset excluding bank. What do we have? 3216521. 3216521. So we have bank. What's our bank there? 3562159. 3562159. So if you add up, what do you have? 11,804,369. 11,804. Right? 369. 369. So that is 11,804,369. So this is your what? Total asset. So let's go now. We have our liabilities. What do we have? Short-term liabilities there. We have 2537,340. 2537,340. Then we have our reserve now. Our reserve will reduce by the what? Bonus issue, which is what? 3267029. 3267029 minus what? 1,600,000. So what do you have? What do you have there? What are our reserve? Sorry, our reserve is 5267. Sorry, our reserve is 5267029. So let's take this out now. 9 minus 0 here will be 9. 2 minus 0 will be 2. 0 minus 0 is what? 0. 7 minus 0 here will be 7. 6 minus 0 here will be 6. 12 minus 6 here will be what? 6. It will be 4 here. 4 minus 1 here will be what? 3. So if you add up this, 0 plus 9 here will be 9. 4 plus 2, 6. 3 plus 0, 3. 7 plus 7, 14. Right hand 4. Carry 1. This is 3. That will be 4. 4 plus 6. That will be 10. 0. Carry 1. This will be 6. 6 plus 6. Okay. That will be 12. 2 carry 1. 5. That will be 6. Right? So we have 6204369. So what's the next one now? Our ordinary, or let's call it share capital, straight up. What's our share capital? 5,600,000, right? 5,600,000. So what do you have? This is 9, 6, 3, 4. 0 plus 0 is 0. 2 plus 6, 8. 5 plus 6, 11. 11,804, 369. So these are what? Total. So you can see it's 11,804, 369. Okay. 11,804, 369. So this, as you can see, is what? Accounting for the bonus what? Issue. Okay. So we were able to account for what? Bonus given to shareholders on the basis of what? 5 shares for what? 2 shares. That means if you have 5 shares, you get 2 extra. Okay, so before we gave the 2 extra, we already have 4 million ordinary shares. So if we go by the assumption that what? Each person has 5 shares, that means we're going to have 800,000 people having 5 shares each. So if you have 800,000 people getting 2 shares each, it means we're going to give out what? 1,600,000 shares. Okay, so if we now go by the unit of shares, which is the extra given, okay, are you there? And then add it to what? The existing what? Unit of shares, which is 4 million. We have 5,600,000. That's what we have done here. Okay, this is the existing unit of share, 4 million. The bonus issue is 1,600,000. That's why you now have 5,600,000. So the bonus here is more like an, so that is what is reducing the what? Reserve. Okay, so you can go through the class on your own. If you have questions, you can reach me on the number displayed. I'll be there to reply with the right answer. And don't forget, we can support online classes by kindly donating or paying into the cash, the account that is what? Displayed. Okay, or you can order copies of my textbook for personal library or for people that we want to give out for what? Free. Of course, you have the right to determine where you want the products to go to. Thank you.